Egon, you're very famous in international audience here in Switzerland. Maybe you're not as known. How comes?
Well, I have an interesting background. I mean, I'm obviously Swiss with my name and I have a Swiss passport, but I was born in Sweden. The family came to Sweden already 1865 and for some reason the Swiss-German got lost.
Aber du verstehst noch ein bisschen Schweizerdeutsch.
Ja, aber schlecht. Ja.
Aber du willst eigentlich auf Englisch reden.
Sadly, it will be in English. Yeah.
But your English is of course well known in all the audiences of finance because you are the one who really stands for gold. When the question is about gold, then everyone wants to talk to you. How comes?
Well, it's become a passion for me. You know, I've been involved in, I started in banking in Switzerland, in Geneva, and then I was in corporate life in the UK for quite a long time. And then later on, I decided I want to go back to investment activities. And I've always been interested in understanding the downside and analyzing risk and understanding the risk, whether that was in banking or in corporate life or now in investment.
The downside means how deep can it, how far can it fall? What would be the reason and what can you do against it?
Exactly. What is the risk? What is the risk? And then I started in the 90s analyzing the situation in the world. And for example, we had investments, we have a group that I was involved with, we had investments in an e-commerce company at the end of the 90s. And then I said to my partners, we got to sell. In 99, I said, we have to sell. And we managed to sell at the beginning of 2000 to a NASDAQ.
And then came the crash.
And then came the crash, and the crash, you know, NASDAQ went down 80%. The company that bought our company, which was NASDAQ quoted, went bankrupt. And that was quite typical. A lot of them did go bankrupt. So I did see the risk. I said, that is to me, that was absolutely clear. It will happen.
And it happened. And then you went into gold.
Yeah.
In 02, 03, I guess.
2002, yeah,
why?
2002.
Why? What is your rationale?
Well, because
you're so much in gold and the world is still living, the world is still around, we have not gone down.
Yes. The reason I went into gold, or we went into gold for ourselves and our investors, was because of the risks we saw. Now, like the NASDAQ in 1999-2000, okay, that was overbought and that was overvalued and overloved and there was high risk. Now, the world didn't go under, but the way I look at risk is also I look at the financial system, the banking system, also the fact that sovereign debt, and the fact that money was constantly printed throughout, you know, several decades. You take
so that was
Greenspan,
the case back then
Bernanke. Sorry?
At the beginning of 2000, that was the case too. So the analysis was at that moment, not now that we all know the debt is skyrocketing. No. Okay.
So I saw the risk and I thought we got to protect. And then already at that point, which was extreme, I said to our investors, you've got to have between 25 to even up to 50% of your financial assets in physical gold outside the banking system. Because to me, that is the only true insurance against the risk I saw.
The only one.
The best insurance. Let's say the best insurance. There are, I mean, you can obviously own farmland or you can own some properties, but right now all of those areas are overbought too and overvalued. So, to me, this is the most perfect hedge there is, and it's a hedge that actually appreciates also.
But I mean, gold has risen. Gold, you cannot eat gold. When you have a farm, at least you can eat it. Something gold would be in a crisis very valuable. What can you do with? How can you buy stuff then? How can you survive?
But you know, how many people eat paper money?
Everybody believes. Almost everybody believes in paper money.
No, but you can't eat it either.
Yeah.
You know, and that's, you know. So what is gold? Well, gold is, well, for us it's insurance, and it's just the ultimate currency. It's the only money that has survived throughout history. And there are certain times in history when the economy is well managed. Not often, but it happens. And at that time, you don't need to own gold, or you have a few percent just as a backstop. But at times like we live in now, since the Fed was started in 1913, when a system was created for the benefit of the bankers, then, a private system that they called central banks, which was, the Fed and many other banks. Swiss Central Bank is also, SNB is also a private bank. And it's created for the bankers.
How? Why is the central bank created for the banks? We have the central bank, we have the banks, and in 2008, when UBS had to be saved they went almost bankrupt, Swiss National Bank said, now we do that and you have to obey. It's us who tell you what to do. So it was not a friend of UBS, the Swiss National Bank. Why is the central banks, why are they for the banks?
No, first of all, this all starts with the Fed. The Fed and who runs the Fed is irrelevant because the Fed doesn't decide anything. It's the bankers in the US, the investment banks. So you're talking about the Goldman Sachs and the JP Morgans of this world. They tell the Fed what to do. The Fed doesn't do anything without asking these bankers. And of course, they fill all the positions also of the central bank or the top position, or they fill or in the government. Trump said that he wouldn't have any Goldman Sachs people, and he's now full of Goldman Sachs people. So they set up this system. That was clear when they met on Jekyll Island. It was to control the money. That's what they said. That was their purpose, and they've succeeded extremely well. To the benefit of an elite, and that elite now is earning more and more money, and that's the top 1% or whatever or less. And then what happens to the masses? The masses just get more and more debt. They don't even realize it because they think they have a good standard of living. They don't understand that it's based on government debt and on private debt.
So what you say, basically, we have somehow a rigged system. We have the central banks, they help the bankers, they did it very well for themselves, for the 1%, and the rest lives out of debt. And now comes you and say, okay, at least the rest can do something about it. They can buy gold. That's a little bit what you say. You should go into politics.
Absolutely. Well, no, I hate politics. I'm not a politician. I want to make quick decisions and worry about my own life and the people around me. I'm not going to solve the problems of the world. But you mentioned the S&B. I think the S&B is run totally irresponsibly. Here you have, as you know, and you talked about it, the biggest hedge fund in the world, with a balance sheet bigger than Swiss GDP. That is buying currencies and is buying stocks. I mean, that's just ridiculous. That's not their purpose.
Absolutely not, but they did well with the stocks so far. At least you can say, well, better than having cash in euro and in dollars.
So are they going to sell before the top, and are they going to go all liquid and buy gold that we recommended that the gold initiative a few years ago? No, they're not. They're going to stick to these stocks. They're going to hold on, and they're going to fall with the stocks and be under tremendous pressure, in my view.
So that's the problem. If they would sell now, if they sold now, it might be good, but they don't do that.
Sure.
Okay.
Yeah, absolutely.
Okay.
Yeah.
So now you're talking about the crash. You have been talking about the crash since for years.
Absolutely.
And it doesn't happen.
Yeah.
I mean, we all wait for the crash. Yeah. What is going wrong?
Yeah.
Why don't you get that crash?
Yeah. You're right. I mean, I'm not a young man, and I'm glad that I'm still around to experience what's happening. It has taken. You're right. It has taken longer than I expected. So we saw the situation 10, 15 years ago at least, more, maybe 20 years ago. We went into gold 2002 because the decision was right to go into gold. It's been the best hedge, and it's been the best actually investment in the 2000s, if you want.
It was a good investment.
What
was the gold price at that time?
$300.
$300 per ounce,
per
and now it's like 1,300. But then the dollar has lost quite a lot of value, so it wasn't as good
so
as
in Swiss francs, what are we talking about? We're talking about 500 Swiss francs an ounce then, and
now it's one.
Now we're
2,000.
Yeah.
Okay, well, still, it's good.
So it's not as good as Swiss franc, but yes, you're right. You always have to measure the result in your own currency. But you take pounds, for example, because I lived a long time in pounds. So in pounds, the gold was 200 pounds an ounce when we went in, and today it's 1,000. Okay. That's 5 times.
Okay. So it was good. It was a good hedge, but still, you said it will crash. The system will crash, and it hasn't. So what went wrong?
No. So where I've gone wrong, or where my timing is not perfect yet. It will be. There is that I underestimated the ability of central banks and governments to fool the people, most of the time, which they have. They're not going to fool them all of the time because they'll be wrong at some point and they'll fail. But at this point, they managed to tell everyone that the emperor has got clothes. He's not naked.
Fooling the people, meaning doing more debt, or what is fooling
Well,
people?
they are buying time by issuing unlimited amounts of debt, either central bank printing or private printing, because the expansion of the banking system, that's money printing too, just in a different form.
Okay.
So we know that since 2006, global debt has virtually doubled from 120 trillion to 240 trillion.
We see that ocean of debt, but the system is still working. So wouldn't it be possible that it works, that can continue?
That's what everybody says at the end of an era, or when or the market tops, or everybody. This is a new normal now. It will go on forever. We just print and print. There are laws of nature. There are laws of supply and demand, and I don't think that we can, by just printing money, set all of those aside. You cannot create wealth by printing pieces of paper.
But it's not only paper. We have infrastructure. We have trains here in Zurich. Mm-hmm. You have your office here in the middle of the economic heart of Switzerland. Switzerland is okay. I mean, it's not a failed state. We can touch things. We have shares of companies. The pension system is still there and paying rents. So why should that all vanish?
Well, let me first say, I'm Swedish and I'm Swiss, and I've spent a long time in England, for example. Switzerland, to me, is still the best country. In spite of all the problems in the world, Switzerland, especially, I don't think I think the financial system is just as bad as any other system. We can come on to the banks later, but we talked about the SMB. But the political system, I think, is the best in the world, although we all say that it's not as good as it was, but it's still the best in the world. The problem is, you're talking about the buildings here, we can see cranes outside here, you walk up, a street next here to get here, and you see every other building is being refurbished or, why? Because money is free. That's why they do it. Money is free. People are buying property. People are investing because it's free money. It's subsidized money, and everybody is leveraging up to the top.
So it's always debt.
It's debt-based, and sadly, so it's in spite of being such a well-managed economy, or has been relatively to other economies, Switzerland will suffer tremendously. And I am worried not just about the central bank, the SMB, which I think will have real problems, which will mean that they will have to print a lot of money, but also for the Swiss banking system, which, as we both know, is about 5 to 6 times Swiss GDP.
And there are a lot of credits in it with the real estate sector, as you just have mentioned.
65,000 apartments, empty.
All right. Now, let me ask you how this meltdown, how this crash that you have been talking about for years and has not happened, but you are still sure that it will happen. That's why you tell the people, buy gold. It's the ultimate reinsurance. How this could be triggered. What is your scenario? What would happen next so that something really bad will happen?
Let me first say, I'm not a pessimist.
No, you don't look like this. Absolutely
I'm not
agree.
a doom and gloom merchant. That just predicts that things are going to be bad. All I do is try to assess risk, try to understand risk and to protect ourselves and our investors from risk. And then I enjoy life very much. I don't go around and be gloomy and depressed, because I'm not.
But you're convinced that something will happen.
I'm convinced something will happen. So therefore, for ourselves and our clients, we are insured. Then we get on with our normal life. We work, we produce things, etc.
So what will happen? What is the trigger?
Well, you see. So if if you look at all the risks, you look at all the risks. Now we have geopolitical risks in many areas, not just Korea, but Ukraine, U.S., Russia, Middle East. I don't have to mention them all. That risk is major. I'm worried about what's happening between Russia and the USA. And they try to frame Trump for having talked to some Russian before the election, which to me is ridiculous. should be able to talk to anyone. But they're doing everything to try to impeach him. And of course, the military wouldn't like to do anything better than attack Russia, or if they could. So the geopolitical risks are major. And then, of course, we have the financial system is bankrupt, as far as I'm concerned. None of the loans ever, outstanding today are ever going to be repaid. Whether you take
debt will not be repaid.
And the European banking system, as we all know, is totally bankrupt and only being held up temporarily, in my view. Now, as I said, things go on for longer than you think. So that's why, but that doesn't change. If you don't buy fire insurance because you expect your house to burn down tomorrow, but if it does, it's good to have, and that's really what we're looking at. It's the risk is as high as it's ever been, or higher. So you look, and then you talk about so you have the financial risk and then economic risk, with most states being also never ever going to repay their debts. And I don't believe that interest rate. You ask what's going to happen. I don't think that interest rates artificially are going to be held down as they have now. At some point, the long end of the market, the bond investors are going to dump their debt because they know they're never going to.
And then you will have interest rates again. So that will be the trigger. Something will happen at the long end, the long bonds, and then the trigger will be the interest rates.
It might not be the initial trigger. The initial trigger can be something obscure, but eventually that is the big problem in the world.
And now tell me, what will happen then? If that is the scenario, how bad will it be?
In my view, this system cannot be saved. They did it. I didn't think that in 2008, 9, or 7, 8, let's say, that they were going to save the system. But they did a good job. I mean, you say Goldman Sachs was bankrupt. J.P. Morgan was bankrupt. Morgan Stanley was totally bankrupt. I mean, I have a relative who works there, and they had to be saved by the Fed and by a Japanese bank. The bonuses that year for all the employees in 2007 or 8 were the same as the previous years. Big bonus.
Bankrupt, big bonus.
Where does that come from? They came from printed money and from governments and from normal people who actually, had
produced something.
So they're going to try it again. Of course, they will, and that's why I think we will have hyperinflation before we get a deflationary collapse. That's how I see it. First, we'll have hyperinflation, high interest rates, etc. But that will fail. Last time, also interest rates were 5-6% around the world. Swiss were lower, but generally they were at that level. Now interest rates are at 0 or below. In 20 countries, they are negative. So they don't have that tool anymore to manipulate. So therefore, there's very little left but printing money. But I think money printing will fail this time. So I think that the system will, all these assets and the debt backing it will implode.
So the implosion will happen. There will be an interest rate coming back, and the system will not save itself anymore. The governments and the central banks will this time not be able to save the system again. That's what is your scenario. But how far will the stone fall down? How deep will the impact be? How much pain will we all have?
Yes,
it's not funny.
No, it's not funny at all. And I think sadly the world will have a lot of pain. Now, will it happen tomorrow? Will it happen now? Will it take a bit longer?
Tell me about the pain. Yeah. What kind of pain? What is pain? I mean,
we
all don't want to have a war. That's for sure. Maybe we can evade this.
Let's hope that we don't have, because a nuclear war will be the end of the world. So let's hope we don't have that. But the financial and economic pain is unavoidable, in my view.
And how will the people feel that?
Well, they will lose their jobs, a lot of people, and they will be hard to get food, and a lot of systems will not work. Social security will not work, pension systems will not work. A lot of people will be very poor, a lot of people will be homeless. So it
goes as far as food. You really think we will have a shortage of food?
I think we will do, but when the system as we have it today, when that implodes, then the human beings are infinitely entrepreneurial, and they'll come up with there'll be people who come up with new things, to grow things, to do things, set up alternative systems. So gradually it will be replaced. But the bubble, the old world, the bubbles we have now, and you walk here around Zurich, which is probably one of the richest cities in the world. You were not going to see.
So it's a reset. It's a reset. And this has been evaded in 2007 and 2008, if I understand you right. Yes, How close were we at that point to that scenario?
No, it was minutes away from.
Okay, so it doesn't take that much more to happen at this time. And you say the bubble is so much bigger this time that it will happen.
I think so. I think we are at the end of a major era, and what I have realized is that, if this is the end of a major cycle, whether it's not just a 100-year cycle, it might be a 2,000-year cycle, whatever magnitude you look at, and you do realize, because we live for such a short time, and it isn't just because you can see the problem that it will happen when you see it, and that's why on the timing I have been wrong. I haven't been wrong on the direction. I haven't been wrong on the protection, but it has taken longer than I expected. I still think that the next 5 to 7 years will be very risky for the world, and it could happen within that period.